Good morning, everyone. Hey, this is Rick Kaufman, your host with LMA Trading. Hey, it is Friday the 13th. Ba-boom. Hey, oh, I don't know if you're superstitious or not, but maybe good things will happen on Friday the 13th, and then maybe they won't as far as the markets are concerned. But I have my coffee, and I am ready to get this Friday moving in the direction that I hopefully we got some plays. So hopefully Friday 13th will be good to us here in our home today. And I hope Friday the 13th is good for you too. So with that being said, let's get into some housekeeping here this morning. As always, just some disclaimers. I'm not a financial advisor, nor do I give financial advice. These videos are for my education. It's part of my daily trade journal. And speaking of trade journal, I also document everything in a Word document. And for some reason, that just flipping disappeared yesterday. I don't know where it's at. It's got to be someplace out on the cloud. But anyways, nonetheless, but I document these videos as part of my trade journal. So hopefully you find these educational, informational, but I'm an older trader, so I am rather risk adverse. So I look for quality setups. I look for low risk, high probabilities. And so those are the basic setups that I look for. And I look at the markets here, and this is part of my review as I see, because it's kind of a way that I think out loud. I try not to leave any stone unturned, but 9 times out of 10, this helps me find things or see things that maybe I didn't see before. And it has definitely helped my trading. But at the end of the day, remember, you trade your own money. So you put your own money at risk, and you can lose every penny. So options and stocks, contain risk and may not necessarily be suitable for every investor. And also just remember that past results and past gains are are not an indication of future results. So, but that's what we're trying to gain an edge here in the market, and trying to determine whether, if we can get a little edge here and maybe set ourselves up for something to come. But at the end of the day, the market's going to do what the market does, and the market is always right. We just have to determine, the probabilities and put the probabilities in our favor. So with that being said, let's go ahead and jump into the markets here this morning. We're looking at the Dow here this morning, kind of a similar setup this morning as yesterday. The Dow is up. It has already went here in pre-market and set a new high. The Dow's been rallying. There is a rotation going on. So I believe some of that rotation is due to the bonds and inflation and some of the things that are going on in the world, and COVID and all these things that are just kind of kicking up. And I know I pulled out my COVID watch list again. I think I mentioned that a few days ago. So, possible, looking at some of those plays again, the stay-at-home plays if we start heading down to some lockdown. But, the Dow's running. Disney had blew out earnings yesterday. So their shares are popping big time. So some of this might be kind of part of that too. So we'll see how this all shakes out in the wash here today. With weekly options expiring today, but then we have monthly options expiring next week. And typically in the past, we're on monthly options, that the week prior is usually a rather bullish week in the markets. But the markets are so overextended. But when we look at this here on the Dow, great uptrend. We are due for a little bit of a pullback, maybe something, to settle down. So, but, we still have some room to run. We're on the weekly chart. We're just approaching the 2 ATR. On the daily chart, we're also around the 2 ATR. So to get up there to the 3 ATR and maybe see a pullback. We are in a weekly squeeze with decreasing momentum. We are in a daily squeeze, but the daily squeeze fired 4 days ago. So we may see this uptrend in this rally last another few days. And then we may see some decreasing momentum to the downside. So that's what we're seeing here. Let's take a look real quick here. Let's go ahead and take a look at the bonds. When you look at the bonds have been kind of on the weekly chart. Going back into last year. This is when March, April of last year with the COVID, you saw the bonds, and then of course the markets tanked, and so we're starting to see the bonds here starting to rise, and so we've kind of pulled back a little bit and stabilized, but they found support here, and so they're rising. So again, these are on some inflation fears and some things that are going on. So so we're seeing some rotation here also in the ZN on the 10-year. This is kind of similar chart, but we saw this here in February where the bond prices, and then we've been steadily going in this direction, and so maybe some things to come. Just something to keep your eye out. Let's take a quick look at the Russell. The Russell, we have a hedge play on the Russell. We are down this morning, so the Russell is usually a leading indicator of some of the other markets because it's the small caps, and some people refer to the small caps as the crappy stocks and the small companies, and so a lot of times here goes the Russell, and so does the others will follow. Sometimes not always is, and in this market your guess is as good as mine of what is going to happen here. So so we have we are looking for a play down here, and IWM is what we're playing on the hedge play. So we'll take a quick look at that here too before we get out of here. And then let's take a look. Actually, I'll point this out here to you on the left of my screen. The VIX is at 1562. So the VIX has been kind of low. So the volatility is low. So we're seeing this have a result in the S&P. So when we look at the S&P here, the S&P has popped and hit an all-time high here this morning in pre-market, which is similar to yesterday. You can go back and watch yesterday's pre-market prep. You'll probably see kind of a similar pattern here. And then, going into the open, I'm not real sure what's going to happen, but I would probably suspect that there's going to be some buying going in and some rotation possibly coming out of the tech sector. Yesterday, the FANG stocks were kind of came to life yesterday and started moving. Apple moved up. We've got a position on Apple, looking really good on that. And so that's, so those things are kind of lifted, the S&P, but also lifted the NASDAQ toward into the close yesterday. So, so with that, let's go ahead and take a look at the Qs here. So the NASDAQ is, again, we're still quite a ways away. We're, 2% away from all-time highs, but, it's pulling back here this morning. And that's similar to what we saw yesterday. Yesterday's candle, you can see here, we pulled back. We bounced on the daily 21. And then from that standpoint, the buyers began to step in. They pushed this all the way back up, and we closed at the high of the day pretty much. So, we almost took out the 15,100, which was looking at maybe overtaking the highs, the high of the previous day, as far as that. So we closed above. So this is what we call a hold. So a close above the high of the low day. So we closed. So that's typically very bullish, a bullish sign. But the markets are pulling back here a bit this morning on lower momentum. So we may see this the Qs begin to pull back if there's some selling going on. Long-term trend, we have them, or still on the daily chart, we have decreasing RSI. So we dropped below the 60 line. So we're heading south on that. You know, and also the MACD and the histogram is showing negative. On the weekly chart, we're kind of basing right here at the 2 ATR. Decreasing momentum this week, and our MACD is also showing decreasing momentum, which is showing on the histogram, and the EMAs here are showing that possibly a downturn. So something just to keep your eye out. So I know in my plays, like my Apple play, any bullish play, I'm playing this market bullish. It's still very, very bullish, but I do have some bearish hedges in play on the Qs, on QQQ, and also on the IWM. So with that being said, let's go ahead and let's take a look at my play on the Qs. On the Qs, we are basically identifying this spot right down here is where, I'm looking at, this is basically a hedge play that we have on for October. So because if we go back and look at the past, October has, September, October, typically the markets do pull back coming out of August. We get the slowdown in the markets, and then, we kind of get a little bit of a selling off and a downturn. Again, this here is showing the pop yesterday. So we'll see how things kind of shake out here today. Right now, indicating a slight open to the downside. When I look at the intraday charts, here's our chart here. So this is kind of indicating a downward motion we see coming here. Our Bollinger Bands have flared open a little bit, but here, we have increasing momentum, but it looks like our MACD is kind of, showing to the downside, and our RSI is right bouncing. If we can get the bounce here on the 50 on the RSI, maybe we'll go back up. But, we're showing some heavy movement to the downside. We are here. This chart here is our 39-minute chart. And so we are in a 39-minute squeeze. And then we have our 15-minute chart over here. So you can see here. So this morning, when basically pre-market open, the Qs have been steadily going down. So this is kind of probably, some more selling rotation taking place here. So, looking good there as far as for our hedge play. So, but we're still going to be very, very bullish. This is just telling me that I need to be very, very cautious, probably risk, keeping risk at forefront in my thinking, and also keeping the idea that there may be more of this to come down the road, and position sizing, and really just looking for base hits. And that's what I'm playing for, base hits. A 1% a day type of deal. Just get a little bit better, maybe even a 0.5% gain, take profits. Because, a mentor's always told me that you can't go broke taking profits. The profits may not be what you want to take at that level. Maybe $20 profit, $50 or $150, depending on your account size, what you're playing for. Maybe much smaller than what I know I would like to have, but you know what? You can't go broke taking profits. You can always get back in when things kind of set up. And that's the way I look at it. So those are low risk, high probability trades. So that's what we're looking for there. Let's take a look at IWM. So when I look at my IWM play, I think I have it here. There it is. IWM is also setting up and looking to the downside. So we have, again, IWM, we're looking for a pullback right here. We bought out of the money puts. On this here, we are in a daily squeeze. We've been in a weekly squeeze for quite some time. On the weekly chart, the MACD is just showing it's just going down. Momentum's going down. Everything's going down here. We've got decreasing, volume each week. And so, those indicators are telling us what, might be to come. We have here on our daily, just trading in a range, -1 ATR to 1 ATR, but we're just above the 50, just above the 21. But, again, the squeeze just can't seem to get the momentum going. So it kind of looks like, yesterday, you might have been looking at this and saying, hey, there's a reversal. This is a very bearish, or I'm sorry, very bullish candle. Very bullish candle where the buyer, we hit lows yesterday. The buyers, in the small caps stepped in and they bought the stocks back up on the rise with, I think the NASDAQ and everything else. So, so the question is will the rally continue for small caps? I don't know. Will the rally continue for the Qs? It looks like it's continuing for the Dow and the S&Ps, but there's obviously you have to sit back and say, there's probably some rotation, looking at some more value stocks, not so much in the growth stocks. And so money may be going into some other plays. And so, might be looking at different things like that. Also, we're looking at, I've got yesterday I talked about Goldman Sachs. I was looking at a play on Goldman Sachs. We did put a put. We did buy a put. We kind of bought it here a little low on the bottom. Probably should have waited later in the day because we were fighting to get above the yesterday's high after we dropped down here. But towards the end of the day, with the rally of the NASDAQ and the other stocks, this did proceed to go to the upside. This morning, it looks like it's going to open flat or possibly down a little bit this morning. I drew this line here. We have decreasing volume. So, on let's see, Wednesday we had 3 million shares. Yesterday we had 2.3. And so it's been steadily, and this was a significant drop. So we may have hit the top here. And just might have got a little bit early. So, our target is in this range right down here. This is where I believe, we'll drop down to the 61.8 or possibly the 76. So, our first price target is right here. Second price target is right here. So, we're looking at this coming down. So we're playing this to the short side. We'll probably add a couple, put debit spreads also on this play also. But this here's, we took a very low risk, just bought one contract at $411, so $4.11. So we're hopefully we'll see this pull back. This was, I think, a September 17th contract. So, so we're giving this a little bit of time. So, we play this a little bit up to the upside. We'll stop out if we break this 418 level right here. We'll get out of the trade if this begins to rally because the financial sectors have been on fire. So when we look at the financials, that the financial sectors have been just kind of on fire. This is what's been driving this, but this right here, you might say, hey, we got a doji candle here at the top, rather bullish candle, but at the same time, again, overall the sector is showing that it could be weakening, that it may be hitting the top. On the weekly chart, it looks like there's more room to go because it likes to run up into the 3 ATR before it pulls back. So, but our momentum is way down here. We have not crossed over on the weekly chart on the histogram. So, I suspect the financials, my play would be that not to enter bullish play here on the financial play. If anything, sit on your hands, wait and see what happens with the overall markets being kind of the guide. There's what I'm looking at. And so that's kind of what I see here today. I've got a play on Apple, and Apple's, looking pretty good. We sold, this is a put credit spread. We sold the 140 strike down here. So we broke out of this, kind of this trend line here. We broke out, set a new high yesterday. But like I said, the FANG stocks were on fire. Right now, it looks like it's going to probably open flat or maybe just a little down. We are in a daily squeeze. So we'll see if we can get this daily squeeze going. We've got, increasing momentum on a lot of the factors here. So let's see what happens. I think, we've got earnings behind us. We've got dividends behind us. So, possibly RSI's rising, MACD's curling here. So let's see if we can get some movement. But we've got time on this. This here is a September 17th So we've got a little bit of time. We'll reevaluate this at 21 days and see where we're at. We are profitable on this trade. So again, might be a situation where, you know, just might take the risk off the table and take the profits we have. It's not quite what we would like to have, you know, because we picked up a $2.20 credit on this, and so I think this is a $2.20 credit on a $5 wide strike. So so that's, you know, pretty decent credit. That's over 40%, and so that's kind of what we were looking at. So we'll, you know, probably look at taking some profit. So we picked it up back down here at the lows. So you know, if we can hold the 145, you know, we may stay in this because, you know, our strike here, we got plenty of time to go and everything. So with that being said, happy trading. You know, Friday the 13th, hopefully you're not suspicious. Click the subscribe button, click the like button, let us know. Hey, have comments, let us know how we're doing. If you see something in our analysis that you don't think is correct or right, make a comment. You know, I'm here learning, education, you know, so, but I just share this, you know, as part of my trade journal. So that way I can review these videos also for myself as I look at my daily plan and what I, you know, with what my goals are. So you guys have happy trading today. Be safe. Have a great day, and also have a great weekend. And we will see you Monday morning in another pre-market prep.